इस स्पेशल एनालिसिस में आपका स्वागत है. A very warm welcome to all of you. Today, we've got a truly fascinating topic lined up. We are literally tearing down the complexities and demystifying hybrid long-short SIFs for the 2026 landscape. Now, if you've been looking at your investment options lately and, just scratching your head over the sheer variety of hybrid funds out there, well, you are in the exact right place. We're going to use clear, structured data to cut right through that noise and figure out exactly what is going on under the hood of these investments. So let's get right into it.
Okay, let's dive into this. Are all hybrid funds the same? It's incredibly tempting to look at a category like hybrid long-short, see a bunch of funds grouped together, and just assume they all do the exact same job for your money. You might think, hey, a hybrid is a hybrid, right? Well, actually, we're going to challenge that assumption today. Because as you'll soon see, just packing a bunch of funds into the exact same regulatory category absolutely does not mean they have the same internal engines.
So, here's a quick look at our roadmap for today. First up, same name, different jobs. Then, we'll logically break down the clutter, moving from the safest, defensive hybrid funds to the middle path with moderate risk, all the way up to aggressive hybrid funds. Finally, we'll wrap up with a performance report card and help you figure out exactly what is right for you. Let's keep moving.
Section 1. Same name, different jobs. This is the core issue right here. The category might look identical on paper, but the reality inside is completely different.
We're looking at 6 main contenders today. We've got Quant QSIF, Edelweiss Altiva, SBI Magnum, ICICI Prudential ISIF, Tata Titanium, and Bandhan Aruda. Now, these are the currently available hybrid long-short SIFs. They all sit comfortably in the exact same regulatory bucket. But here's the catch. Depending on which one you actually pick, you could be targeting very, very different financial outcomes. Let's start breaking them down by risk profile.
Section 2. Defensive Hybrid Funds. We are kicking things off right at the safest, most cautious end of our risk spectrum with income generation in mind.
The real foundation for this defensive posture is a risk band of level 1. This is our visual anchor. Out of the 6 funds we're analyzing, Edelweiss, SBI, and Bandhan all share this level 1 rating. That tells us right off the bat that their structural mandate, their main job, is to prioritize capital protection and stability over wild, aggressive growth.
Let's crack open our first level 1 fund, the Edelweiss Altiva. Look at that allocation, a massive 44% sitting in fixed income and another 38% in cash, future arbitrage, and covered calls. It leaves just a tiny 4% sliver for special situations. What does this mean for you? Well, this fund is heavily income-oriented and incredibly debt-heavy. Because it uses special situations just as minor return enhancers, it is highly suitable for folks, like retirees for example, who want consistent income with much, much lower volatility.
Now, before we explore our next defensive fund, SBI Magnum, we really need to understand the core engine driving it, the collar option strategy. Sounds a bit complex, right? But to put it simply, this is just a downside protection tool. It's specifically designed to manage returns and control your losses, basically putting a firm floor on how far your investment can drop while still allowing you to participate when the market actually goes up. It's essentially a built-in safety net. And this brilliantly illustrates exactly how SBI Magnum puts that collar option strategy to work. We have 66% of the portfolio in hedged equity, perfectly supported by 25% in debt. Notice the absolutely crucial word there, hedged. They are selectively using unhedged equity, sure, but the vast majority of it is completely protected. This setup focuses purely on multi-asset income generation and volatility control. It's practically perfect for someone who just wants steady returns with a lot lower risk.
Rounding out our defensive bucket, we have Bandhan Aruda. The positioning here is highly, highly conservative. It combines equity and debt, but the overall character is a balanced approach with a very distinct debt tilt. In fact, its benchmark is the CRISIL Hybrid 85-15 Conservative Index. So if you're a cautious investor just wanting to carefully dip your toes into the hybrid long-short category for the first time, this structure gives you a highly controlled risk profile.
Section 3. Middle Path, Moderate Risk. All right. Let's step up the risk ladder a bit to the middle ground, balancing income with real alpha potential.
We are officially moving out of level 1 and punching right into risk band level 3. This distinctly separates our next fund from those highly defensive, income-generating ones we just covered. Level 3 indicates a real willingness to accept a bit of moderate volatility in exchange for slightly higher potential gains.
Now, what's really interesting about this slide is the nearly perfect balance within the Quant QSIF portfolio. You've got 29% in equity, 28% in debt, and 23% in arbitrage. It's a fantastic split. It's not clearly debt-heavy, and it is definitely not completely equity-heavy either. It seamlessly combines fixed income, arbitrage, and long-short exposure through derivatives to strike a pure down-the-line middle path. It is literally the textbook definition of a moderate, balanced hybrid strategy.
Section 4. Aggressive hybrid funds. Moving on to our final, most aggressive bucket for investors with high-risk appetites who want dynamic, flexible strategies.
So here we have a tale of two very aggressive funds, Tata Titanium and ICICI Prudential ISAF. Both are equity-heavy, but they approach their risk totally differently. Tata Titanium combines equity-long positions with REITs and INVITs. It's definitely aggressive, but it caps out at a level 3 risk band. ICICI, on the other hand, wow, it steps all the way up to a level 5 risk band. It evaluates opportunities across both equity and debt, heavily relying on stock selection, event-based opportunities like IPOs and buybacks, and very active management. It is a highly tactical approach strictly for those who can stomach some real bumps along the way.
Section 5. Performance Report Card. Okay, we've looked under the hood at all the engines. Now let's see how they actually perform out in the wild.
Just a quick reality check before we reveal the actual numbers. What we're looking at is a snapshot of returns from each fund's respective inception date, right up until the 31st of March 2026. Now, because these funds launched at different times, the market conditions they faced initially were obviously a bit different. However, looking at these since inception numbers gives us a crystal clear view of how these radically different internal structures are behaving right now in the current market.
And the performance reality reveals a pretty stark contrast. Our level 1 defensive funds are currently sitting comfortably in the green. Edelweiss Altiva leads at a positive 1.75%, with Bandhan Aruda at 0.83%. But as we move down the list of the moderate and aggressive equity-heavy funds, the current numbers shift into the negative, with ICICI Pru ISIF showing the weakest current performance at a negative 7.9%.
Section 6. What is right for you? So the crucial point is, picking the right fund is not about blindly chasing numbers. It's all about structural suitability. A defensive fund doing exactly what it's built to do is going to perform very differently from an aggressive fund caught in a volatile market cycle. Because these funds are structured so radically differently, we just went from level 1 debt-heavy safety nets all the way to level 5 event-driven aggressive engines. Your selection has to be based on this specific checklist: your personal profile, your exact financial goals, your true risk appetite, and how the fund aligns with current market scenarios. At the end of the day, personal alignment is literally the only metric that matters.
I want to leave you with one final thought. A question to really pause and reflect on. बाजार के हर दौर में आपका portfolio कैसा बर्ताव करेगा? How will your portfolio behave in every market phase? Think about it. When the market inevitably drops, are you holding a level 5 aggressive fund when what you really needed all along was the collar option strategy of a level 1 defensive fund? Knowing your true risk tolerance before the market actually tests it, well, that's the real secret to long-term success.
And with that, we've reached the end of our special analysis today. I really hope this breakdown has helped demystify the hybrid long-short space for you. If you want to figure out exactly which structural engine fits your own personal financial journey, please don't hesitate to reach out. You can WhatsApp our team at 9205523100 or just shoot an email to info@sifinsight.com to get your portfolio perfectly aligned. Keep learning, stay focused, and I will see you in the next analysis.